Welcome. We are following this book. This is chapter 10, Plant Assets, Natural Resources and Intangible Assets. We have 5 learning objectives. Today we will discuss revising periodic depreciation. Okay. So here accounted for in the period of change and future periods. Change in estimates. Here the main point is change in estimates. Suppose we have a useful life, suppose 10 years, but after 7 years we estimated that the machine or equipment will run for 15 years. So for another 8 years we need to be calculated this depreciation. Okay. So no change in depreciation reported for prior years. Not considered an error. This is the 3 characters of revising periodic depreciation. Okay, now we show an example. Here we have a helpful line. Use a step-by-step approach. Number 1, determine new depreciation cost. Number 2, divide by remaining useful life. Okay, new depreciation cost. Determine. This is the first point. And divide by remaining useful life. This is the second point. Okay. Now, revising periodic depreciation. Just please see the example attentively. Illustration. Arcadia SS purchased equipment for $510,000, which was estimated to have useful life of 10 years with a salvage value of $10,000 at the end of that time. Depreciation has been recorded for 7 years on a straight line basis. In 2015, that means starting 8 years, it is estimated that it is determined that the total estimated life should be 15 years, which a salvage value with a salvage value of $5,000 at the end of that time. Okay, that's the question. What is the journal entry to correct the prior year's depreciation? And number 2, calculate the depreciation expense for 2015. Okay, just a very simple example. Equipment, purchase equipment 5,10,000. This point we have purchase 5,10,000, and it will run 10 years. Suppose this is 10 years. 10 years. And with a salvage value 10,000, that means this is the 10,000 salvage. Okay, so after recorded 7 years, so here suppose this is the 7 years. 1 year, year 2, year 3, year 4, year 5, year 6, year 7, year 8, year 9, year 10, year 11, year 12, year 13, year 14, year 15. Okay, so after 7 years, that means after 7 years, this place of a straight line basis recorded. That means this time already we have recorded, our depreciation has been recorded. In 2015, suppose this is 2015. 2015, this is 8 years. It determined that the total estimated life should be 15 years. That means it will be 15 years. That means another 8 years remaining. Okay, another 8 years remaining. When you revise the years. Okay, I think everybody is clear. Should be 15 years and salvage value 5,000. And salvage value will be here $5,000. How much dollar? $5,000 the salvage value. Now question, what is the journal entry to correct the prior year's depreciation and calculation depreciation expense for 2015. Now we move to next slides. No entry here, and this will be our next slides. Estimated cost according to question we have got it 5,10,000. Okay, this is 5,10,000. This is the equipment cost. Salvage value 10,000 and depreciable base 5 lakh. So it will run 10 years. So for 10 years useful life original 10 years. So after division we are getting this figure. This is the 50,000 annual depreciation. For 7 years it will be our 7 years depreciation. We call it, this is the accumulated depreciation. Okay. So in our balance sheet 31st December 2014. Okay. Very interesting matter. Plant asset equipment 5,10,000 and accumulated depreciation this one 3,50,000. So net book value now 1,60,000. Okay, this one. So this would be done another 8 years, and after 8 years we will get 5,000 salvage value according to question. Okay, so now we calculate in our next slide. Please look here. So net book value 1,60,000. How much? 1,60,000. Clear to me? Okay. Now I make you clear the salvage value new 5,000, and this is the depreciable base 1,55,000, and useful life remaining 8 years. So it will be division. That means here it will be division. So 8 years. The annual depreciation this one. That means $1,50,000 divided by 8 years. So it would be 19,357. Okay, this figure. So now this figure will be depreciation expense, accumulated depreciation. Depreciation expense debit and accumulated depreciation credit. So everybody is clear. Depreciation expense debit, accumulated depreciation credit. This is the depreciation expense calculation for 2015. This is the 2015. Okay, journal entry for 2015 and future years. Thank you so much for joining with me.